Definitely, Alex. Like you mentioned, Infosys tops that list of BNSN stock cloud of the day. That's on back of his Q4 earnings as well as buyback. A lot of analysts have also said that Infosys has missed estimates. The Q4 earnings have missed estimates. That's why you're seeing the sharp cut coming on the stock price. It's fallen most in about 2 months. Moving on, apart from Infosys, the other stock that is seeing a sharp cut is Eicher Motors. HSBC has downgraded the stock to hold from buy. They think the risk reward is unfavorable for this particular counter. Wipro is a counter that is actually holding on in today's trading session. Earnings are due later this evening, so all eyes on Wipro as well. AB Capital, as Aditya Birla Capital, is in focus because the board has given nod for the IPO of unit Aditya Birla Sun Life AMC. You have Root Mobile that is declining in trade today. The company has said the systems are secure but have engaged with a third-party cybersecurity consultant to independently verify and audit its system. There were reports about some issues coming on that particular front. So Root Mobile has clarified, yet the stock is declining in trade. And 5 Paisa Capital, that particular counter, is surging in trade. They said that they are going to raise 250 crores by allotting shares and warrants on a preferential basis to institutional shareholders and promoters. So these are the particular stocks that I like to mention. Apart from that, you have Dr. Reddy's, Airtel, RCF, National Fund, that all are in news and are actually seeing some sort of good trading session as well. But Alex, today let's talk about the mid-cap IT sector. We have had Infosys and TCS give out their earnings. Wipro expected this later this evening, but now all focus shifts on mid-cap IT sector as well, with Mindtree reporting its earnings tomorrow.
Absolutely. In fact, earlier in the week, Cheryl, we had a conversation with our experts about the large cap IT, and this was ahead of the TCS earnings. And we had quite the interesting conversation, and that was followed the next day by a conversation on large cap pharma, which was also quite insightful. Today, let's take a closer look at the smaller IT companies, because there has been a little bit of strength that has built along with that overall rally that you saw in the weeks running up to the earnings of the IT companies that kicked off this week, of course. I'm joined as of now by Kunal Bothra. We will soon be joined by Ashish Maheshwari of Blue Ocean Strategic Advisors. But I want to go across to you first, Kunal. Good morning to you. And just to kick things off on this conversation on mid-cap IT, you've seen some stellar moves, and perhaps Tata Elxsi is clearly leaps and bounds ahead of some of the other names in the pack. What are the prospects going forward, though? Where do you see them moving from here, and what stock, according to you, is the one to keep an eye out on?
So good morning, Alex. Typical what happens with any kind of a bull market or any kind of a bull trend which you get into in a particular sector. There are two parts of the sector which tends to move up. So one of them, of course, is the large caps, and the other is the mid caps. Now, when there is a phase in the rally or in the trend which happens where the mid caps, they tend to outperform significantly the large cap one. So last week we were discussing, or this week, start of this week, we were discussing on the large cap IT stocks, and how I mentioned that TCS been an underperformer with respect to the overall IT index, and Infosys and Wipro has somehow to be one of the stronger candidates in the large caps. But the mid cap and the IT stocks is showing a completely different perspective. You've seen a phenomenal uptrend coming on to the mid cap stocks. And I think out of the comparison which I have done on the prices for the mid cap IT stocks, Tata Elxsi stands out to be one of the strongest price gainer out of the lot. I think the stock has done phenomenally well, and yes, leaps and bounds ahead. As you can see on the charts, the extreme or the topmost line which you can see is the line for Tata Elxsi. So just by a sheer comparison of the previous year lows from the last March 2020 lows, from there itself you can gauge that how much Tata Elxsi has outperformed as compared to many of its other peers. Now, the second best performer is apparently L&T Infotech. That stock has also tried to pick up pace. Mindtree, then followed by L&T Technology Services, and then the Nifty IT Index. So, which means that typically that what we see that large cap large cap stocks in one particular sector, they tend to just about meander very close towards the benchmark, but it's the mid cap end which tends to outperform and outshine quite strongly. So we are seeing exactly those kind of perspective over here. Tata Elxsi, of course, seems to be one of the strongest candidate in that sector overall.
I come back to you, Kunal. Now, I want you to perhaps look a little bit in the future, and you tell us maybe 1 year hence, and I know that we're likely to see a lot of news-based events, and there are a lot of uncertainties on the fundamentals that you obviously cannot comment on at this point. But on the chart specifically, which out of this pack looks the best place to take off, and therefore what levels would you suggest an investor should consider?
See, again, I think it's a very pertinent question, Alex. There are two important things which at least I watch out for when I look at stocks and the behavior of the stocks compared to either its immediate peers or the behavior of the stocks vis-a-vis the sector overall. Now, what stands out to be that Mindtree and Coforge apparently are the two stocks which tend to give the first move whenever the sector tends to show any kind of a recovery. So, at least the price study analysis which I've done on relative basis for these stocks indicate that Mindtree and Coforge, they tend to first lead the rally. Of course, once the sector gets into more of a comfortable territory, it then gets outshined by the other peers like L&T Infotech and Tata Elxsi, etc. So if I have to forecast, or if I have to assume, first of all, my assumption would be that possibly the mid-cap IT and the large-cap IT index, or the IT index on an overall basis, should do pretty well over the next couple of years at least, if not more. And I think on that backdrop, entering into few of the mid-cap names could be a good strategy. As I said, I would probably prefer stocks like Mindtree and Coforge because of the way these stocks, they tend to have a small, very minute kind of a leadership quality amongst its mid-cap peers. But then I think an ideal kind of a return could probably be generated if you have a mix of large caps and mid caps. So one may not need to take extremely high risk in terms of trades like Tata Elxsi. Yes, the stock has done extremely well in the last 1 year, going up to almost 4.5 times odd and beyond that as well. But in terms of risk reward, it could be prudent enough that you catch on to the tier 2 or the tier 3 names in the performers. And I believe Mindtree and Coforge could be two top candidates in the mid cap IT space.
All right, a point taken. Mindtree, Coforge are the stocks to watch, at least on the technical front. I'm joined now by Ashish Maheshwari, Director at Blue Ocean Strategic Advisors. Thank you so much for taking the time, Ashish, and good morning to you. We're having a conversation about mid-cap IT specifically, and of course, IT is the flavor of the season right now, at least for this week. We have Wipro that is coming up with results. We've seen Infosys, we've seen TCS. We had a conversation on large-cap IT earlier in the week. But if you were to talk about mid-cap IT, and in the context that we're currently in, the prospects for IT as a whole are perhaps brighter than several other sectors. If you assume that you might have the pandemic extend for another 6-7 months for the rest of 2021, this is one sector that could do well. Which, according to you, are the mid-cap IT stocks to watch for, and why?
Yes, I agree with you. If this pandemic continue for some more time, which is more likely and higher probability, mid-cap IT stocks and otherwise overall IT pack is expected to do well. So my idea is that these Indian companies which have transformed from regular service provider to digital transformation for corporations stand to gain out of this pandemic wave. So here, in my view, mid-cap IT stocks will first of all continue to do well. They are going to come out with very good results for this quarter also. In fact, I'm quite okay with the results given by TCS, Infosys too. But only thing is, as the street is always expecting more and more, so there's some profit taking. But otherwise, there's nothing wrong with the numbers. So ditto for mid-cap IT companies, traction is very much there. And as a lot of people are working from home, so operational efficiencies are also going to be there, which will be shown in their EBITDA margins. As far as my couple of stock ideas in this sector are concerned, I like again Coforge. This is a stock which is heavily tilted towards insurance and financial services particularly. And the way like COVID and other things are happening in the world, like the spending of BFSI sector has really gone up towards the digital and cloud side, where Coforge tend to gain. Last quarterly numbers were also very good for Coforge, and again in this quarter I am expecting a very good set of numbers along with some big deal announcements, etc. Last quarter they won a deal of around $192 million. Again this quarter I am expecting in $250 million plus deals plus recent acquisition. So this is a stock which has potential even to touch 3,500 mark in next 3 to 6 months time. Another small cap idea which I like is Sobex Systems Limited. This is a stock where we don't talk too much, but this is again 2,600 crore market cap company, and they are again having business of artificial intelligence and digital side. They are doing pretty well. They are coming out with new products in this particular domain. So this is the stock in mid cap space can we watch for, and I'm expecting next 6 months are going to be very good for Sobex.
Okay, Coforge outperforming in trade today as well, 5% on the upside in the intraday charts. I do want to come back to you with a quick follow-up, and then we can move to the high risk and low risk ideas. But on the mid-cap IT front, what according to you are the downside risks, if you can tell our viewers?
So a few downside risk which you can assume. First of all, the currency tailwinds like what these IT companies have gotten recently because USD is strengthening and compared to that other currencies weakening. So if again INR starts again gaining this 5% ground which it lost recently, then like this can be negative for these companies. Besides this, if there's some slowdown in issuing new orders, etc., for these companies in digital space, then it can be a downside risk. But I'm not too bearish and I'm not too skeptical as far as fortunes of these companies are concerned, because there's plenty of business to do in US as well as in European market for these companies. And in my view, at least for next couple of years, you will see the earning momentum, what we have seen in last 6 months will continue. So I'm bullish as far as next 6 to 8 quarters are there for mid-cap IT companies.
All right, that is the take coming in from both the experts on the mid-cap IT sector. Let's now talk about the high risk and the low risk ideas from both of our experts. Good morning, Kunal as well as Ashish. Kunal, I'll come first to you. What are your high risk and low risk ideas for our viewers?
So I'll suggest a couple of calls. First one, which I'm suggesting, is a buy on Sun Pharma. Now, in this kind of a market, the pharma stocks apparently they tend to outperform. We've seen some pickup in pharma names like Cipla, etc. as well. Sun Pharma as well has been holding on pretty well above that 600, 620 zone for quite some time, and it's nearing a resistance breakout on the short-term charts as well. So would suggest a buy on Sun Pharma. Targets to be kept at 700 and stop loss could be kept at 610 mark. The second one, which I'm suggesting, is a sell on Bharat Forge. The stock has broken, some crucial supports today. In fact, one of the indicators which clearly indicate, some sort of a breakdown on the short-term charts is on the Ichimoku front as well. The stock has broken below the Ichimoku support as well. So I believe, Bharat Forge could be a stock which can go under some bit of more selling pressure in the near term. So would suggest to sell. Targets of 540. Stop loss could be kept at 579.
All right, those are the calls coming in from Kunal. Ashish, good morning. And what are your high risk and low risk ideas for the viewers?
Yeah, my high risk idea is Balrampur Chini. In my view, commodity cycle for sugar is again started looking good. And again, ethanol related consumption is again picking up because of COVID, a lot of ethanol going into for sanitizer, etc. And along with globally, sugar prices are also very firm. So this particular sector will get fully re-rated now. Those stocks are at 52-week high, but still more potential is there because of sheerly under ownership of sugar sector among the institutions. So this is a stock to buy at this price also. Another stock which I like is Gujarat Fluorochemical. This is a company which makes fluoropolymers, fluorochemical refrigerants and chemicals, and we have seen good traction in all the segments in Gujarat fluorochemical business. So in spite of market is down, this stock is continuing to do well. So if somebody can hold this stock, I think the way we have seen rally in the SRF, you are going to see in Gujarat fluorochemical also. So this is a very low risk stock, and another 200 rupees you can gain in the next 6 months here.
All right, that's a high risk, low risk idea coming in from Ashish as well. On that note, we'll slip into a break on this edition of Buy Now Sell Now. Hang in there, Kunal as well as Ashish. And for all of our viewers, if you've not logged in, so log into YouTube so that you can answer all your queries and we will answer them live. So stay tuned. After the break, we'll come back with the query segment.
Welcome back and welcome to all those of you who are tuning in live to Buy Now Sell Now on our various social media platforms. We are going to take all of your queries, so be patient and we'll try and answer as many as possible. The first one coming in from YouTube is from Nino Kurvilla, and it's a long-term query. Is it prudent to hold advanced enzyme for the long term, bought at levels of 230 and booked some profit at 350? Ashish, coming to you on this one, since it's a long-term query. On the fundamentals, would you say it makes sense to hold advanced enzyme?
Yes, it makes sense to hold advanced enzyme. First of all, they are this is a company which is quite unique, and you don't have too much competition in this space from other players. And the kind of products that they make is something like they are having monopoly in the market. So I'm always of the view that if your businesses are like that, where you command pricing, power, at the same time, this company is almost very low leverage also. So my suggestion will be to continue to hold, and if you are already having long-term view, so you may get very good returns. In fact, you have bought at very attractive price also. So my suggestion will be to remain invested.
All right. Moving on to our next query, and this is coming in from Sameer Gupta from Coimbatore. He's saying that he's bought 15 shares of Karnataka Bank at 66 rupees per share. He wants to know, he's actually rather saying, please share the 1 to 2 year horizon for this particular account. Kunal, I come first to you. How is Karnataka Bank looking like on the charts? Are the charts looking worth maintaining the holding in this particular stock?
Well, I think it's prudent enough to shift to a large cap name. Karnataka Bank, even though the stock has recovered and doubled from the March 2020 lows, but it's still way off from its all-time high levels of 170, 175 odd. So I think in terms of that, it's not been one of the strongest performer in the banking stocks. So I would suggest that you should make a switch and go back to I think the traditional names like ICICI Bank or maybe an HDFC Bank. These stocks have already gone through a 15 to 20% correction from their 1 month, 2 month highs. So they are also available not at a premium, but they are available at a significant discount from its immediate high. So I think the risk reward as well is very attractive. I would suggest a switch from Karnataka Bank to something like ICICI Bank or maybe HDFC Bank.
All right, HDFC Bank results, of course, over the weekend, so do stay tuned for that. Let's take the next one. This one, Ashish, is a bit of a generic question, and I think you can then, therefore, hit the ball out of the park. Rahul's got a question for you. He's looking for the next 5 years. Which, according to you, is the best stock to invest in?
As you mentioned, any sectoral preference or is sector agnostic?
No, he hasn't. So that's what I said. It's completely open. You can hit the ball out of the park.
Okay. So I think for next 5 years, if you are having that long time frame, it's good to make a portfolio of 2-3 stocks. So I'll suggest one large cap stock, one mid cap, and one small cap stock. So portfolio is balanced. So my large cap pick is going to be Tata Steel. In my view, Tata Steel has great fortune for next 5 years. The way steel prices are moved up, they have reduced their debt quite a bit. At the same time, there's quite a bit visibility in that next 3 to 5 rupees, at least for Tata Steel in next 5 years. In mid cap, again, as I mentioned, Coforge is a stock I'm very, very bullish. This is a stock which has potential to even touch 6,000 rupees by virtue of their presence in very strong presence in BFSI segment and the kind of management now they are having. So Coforge can be looked at from that perspective. And a small cap idea, I like to go for Prism Cement. In my view, cement is again a sector which will do really very well in next 3 to 5 years in India. And this is again a stock which can touch 300 mark if you can remain invested for 3 years, 3 to 5 years.
All right, moving on, we've got another viewer query, and this viewer query is coming in from Aniket Gandhi. He's saying that he subscribed for IRFC IPO with 575 shares at 26 rupees per share. He wants to know what should he do with this particular holding at this point in time. Kunal, I'll come first to you about this. IRFC recent listing definitely is off those price that Aniket has bought. So what should he do with this particular counter? How are the charts looking, if in case you can speak about IRFC's chart, considering that it's a recently listed company?
No, Cheryl, I won't be able to comment. It's a very, very recent listing, just 1 month of price patterns in terms of history, and whatever the price has been showing in the last 1 month, it's still quite bearish. So a bit premature for me to comment on the stock.
All right, then Ashish, I'll take this question to you then. How does IRFC look like? What should Aniket do? Does it make sense to hold on to this particular counter fundamentally?
See, this is again an IPO where not too good a response was there, and after I was listing also, we have seen continuous pressure coming in this particular stock because the kind of concentration they are having towards the railway business. There's something like now investors are shying away from. So my suggestion will be to exit from this stock and look at some of the other stock, particularly you can buy an IT or pharma where you can get better returns. So why don't you look at buying Kedila Pharma if you want to switch your position in pharma pack, or in IT like we are mentioning Coforge again and again. Look at Coforge. At least you will recover your whatever the losses are there in next 6 months time, because I'm not too bullish on IRFC future prospects in short term.
All right, let's take the next one. You've got a short-term query, and coming to you for this one, Kunal. SBI Cards is the question. For 3 months, bought at a level of 920, stock currently trading around 888, so losing some ground. Sricharan can hold on for 3 months. Should he do so?
I think he should hold on to it. It's a stock which is going into more of a repair mode, mean reversion mode for itself. 3 months the stock has ebbed off some 25-30%. From 1100, 1110 to 880, 888, where it's currently trading. So it's going into that mean reversion mode. The structure of the stock has been quite strong and phenomenal. Support-wise, 850 is a good support for SBI Card. So I think if you're looking to average out further and then probably wanting to increase the holdings, I think closer to 850 levels is where I would suggest you to average and hold on.
All right, next query is coming in from Shekhar. And hi Shekhar, we are also very happy to connect with all of our viewers via YouTube. But I'll take his query, and he's saying that he's bought Dr. Reddy's at 4,800 rupees per share a week ago. He wants to know what's the next target in a medium term. Kunal, I'll come first to you on this. Dr. Reddy's, given that a lot of news flow supporting this particular counter, but how does the stock look on the chart? What's the medium term target, if you could tell our viewer?
So I think from a medium-term view, if the pharma stocks and the rally of the pharma stocks continues, or rather look at it this way, the market volatility continues, then possibly the markets can make one more round of shift and tilt towards the pharma names. And if that's the case, then probability of Dr. Reddy hitting back to that 5,400, 5,500 mark should be a possible trade. But it's now a catch of time frame. So whether it'll take 1 month, whether it takes another 3 to 6 months, it all depends on the kind of the events, the news flow, as well as the market volatility which shapes up over the near term. So I would believe that if you have a time horizon of at least 3 months to 6 months, then I believe a possible targets of 5,400, 5,500 on Dr. Reddy should be a decent enough target.
Wow, significant upside seen there on Dr. Reddy's. Let's go to a long-term query, and Raghu unfortunately is losing some ground, Ashish, in the investment that he made in Coal India, as much as 40%. In fact, if I'm not mistaken, this was the worst performer on the Nifty 50 in FY21. What are the prospects? Should Raghu look at switching his investment perhaps into something that has better prospects?
So, Coal India, I'm not also very bullish as such. Again, the reason is output of coal mining is again dropping. At the same time, a lot of now power projects and new projects are shifting to renewables and other source of energy like natural gas, etc. So this is the reason we have seen a continuous fall from 160 levels to almost 110 levels in Coal India, and again it is stagnant at those levels. So my suggestion will be to exit from Coal India at this price because not too much upside is there in particular this particular stock.
All right, our next query is coming from Swaminathan Sundaresan. He's saying, is it worth investing in Indian Energy Exchange at the current levels? Kunal, Indian Energy Exchange in the last 52 weeks has seen a solid run up, but does it make sense to enter this particular counter at this juncture?
So I think it's I think it's a stock which has done reasonably well off late. Last 12 months have been phenomenal. 12-13 months have been phenomenal for the stock, from being a level of 125 to 375. So it's already gone to 3x mode. And the structure is improved just off late. When you look at the monthly charts, it's just that the last 3 months, the pace of rally has picked up much higher for IEX or Indian Energy Exchange in that sense. So I think it's a good stock to really bet on from a longer term view. But then the strategy has to be a bit tweaked. I would suggest that have a buy on dips kind of a strategy. The stock has this habit of going into periodic consolidations after every bout of rally. So if you can take opportunity of that consolidation and then look to buy lower, look to average it lower, then I think it's a much more better strategy, specifically if you're holding on to it from a longer term view.
We've addressed this yet. Of course, buyback was announced for Infosys, and the question, Ashish, is on Infosys. KK is asking this. Is it worthwhile buying Infosys now at current price of 1,350 for buyback gains? And what kind of acceptance ratio is expected? Would you be able to comment on something like that?
Well, I think there's an open market kind of purchases what they are going to do. So from perspective of buyback, it doesn't make sense to buy now. But if it corrects from here approximately 50 to 75 rupees for buyback as well as from long-term holding, you can surely take an entry now in the stock. But let it correct more. After that, we'll make a viewpoint.
All right, a query coming in from Rajeshwari Tumuleru. She's saying that she's bought Zensar Tech at 275 rupees per share. Wants to know 3 to 6 month view for this particular counter. Kunal, we spoke about mid-cap IT sector earlier in the show. This one also had seen a very good rally in the last 1 year. What's the charts look? How are the charts looking for this particular counter?
So again, I think an interesting stock which has done pretty well in the last 12 months, moving up to almost 3x, 3.5x in that kind of a time frame. But the bigger catch with such kind of names is the liquidity. Now, for example, on a day like today, where the IT stocks are doing pretty well, specifically the mid cap names, the average trading volume for the stock is just 55,000, which is a very nominal and an average kind of a trading volume as compared to the other peers in the same category on the mid cap side of the IT pack. So I think that's the bigger catch, because such kind of a low low liquidity in terms of volumes could probably play a bit tricky when the stock actually goes into any kind of a correction. But nevertheless, I think because of the recent history, the way the stock has rallied and the sector which has done exceedingly well, I would suggest that you can look to park some investments over here. I think the stock is at 260 to 65 levels, which is also a decent support for the stock price. So you can start entering at current levels and look to add on dips. But again, the catch over here is low liquid. So ensure that you don't park too much of the corpus on just one single stock.
All right, interesting query coming in from Santi next. View on Apex Frozen Foods is sought for the long term. Ashish, therefore, I'm coming to you. Bought at levels of 203, so more or less at cost price right now. Should they hold on? There are problems with regard to the supply chain, but I believe that the volumes that recently were announced were better than expected. What's the view on this counter?
See, as far as their financials are concerned, last 2 quarters were not that good. Last quarter was just only 2 crore kind of profit for them. And again, as you rightly said, supply chain related issues and all those things are there. But only one good thing is that the stock is still available at 20% plus from the 52-week low. And we have seen a high of almost 330 in the stock. So if you are really having long-term horizon, then you can buy and hold this stock. Or you have already bought, then you can continue to remain invested and just wait for this quarterly numbers. Because I'm expecting at least some turnaround should be there in this quarterly numbers. If it doesn't happen, then surely exit from this stock. So just wait for this quarterly numbers.
All right, Ashish, I'll come to you with this next query. It's from Wayne DeMello. He's asking your thoughts on the cement sector for the next 6 to 8 months. We know cement sector has been seeing good momentum, good traction coming in that particular sector as well. There have been price rise as well. So what's your view on the entire cement sector coming in for the next 6 to 8 months?
See, 6 to 8 months is slightly tricky in cement sector now. Last week, it was looking quite okay when all these companies have increased the prices. But the way now lockdowns are being implemented in Maharashtra, and it will be followed by other states also, wherever the situation deteriorates due to COVID, the construction activity has to take some halt or take some backseat. This is the reason for last couple of days we have seen sale off in cement stock, and in my view, some more selling is going to continue in cement pack. So my suggestion will be to wait for a few more days and just see how this COVID situation takes shape. And post that, we can look at the stocks like Ultratech Cement and Shree Cement and large cap to make an entry, because they have corrected quite a bit from highs.
Right. Gentlemen, if we can keep the answers a little short, we'll be able to slip in 2 more. The first one is from Badri Rajan. He's holding 100 Tata Motors DVR shares at a level of 126, Ashish. Should he hold on to this investment? We've seen signs of JLR improving with sales.
Exactly. So I'll suggest to remain invested in Tata Motors DVR as such. And I think the stock has already hit the bottom, and from here, whatever you are going to see, you will see good gains. So my suggestion will be to remain invested in Tata Motor DVR.
Okay, and the second question is from Puneet Nanda. This one's for you, Kunal. Sterlite Technologies for the short term, that is 6 to 12 months. Would you suggest a fresh entry?
Not really. I think the stock is still yet to hit a support level. I think if it hits back towards the 200 mark or slightly lower than that, 196, 197 to be precise, then I think it becomes a good contrarian zone to enter into the stock. So long-term, medium-term trends attractive, but short-term wise, maybe a better risk reward could arise if the stock drops below that 200 mark.
All right. Thank you, Kunal, as well as Ashish, for joining in and resolving so many of your viewer queries. And all the viewers who've logged in, don't worry, we will definitely address your queries in the next episode. But definitely write on to us and stay tuned to ET Now, and log in tomorrow also at 11:20 a.m. where we'll take all of your queries. All right. On that note, we'll slip into a break in this edition of Buy Now Sell Now. But stay tuned, more coming on the other side of the break. Don't go anywhere.